All right, what's going on, everybody in the building? It's your boy Crypto Wolf back again, and I've been hearing the topic come up a lot lately in conversations and comments on other platforms, pretty much everywhere, about paper trading. If you are not familiar with what paper trading is, it's basically a training account. It's like if you were going to be trading crypto, but you want to keep the training wheels on for a minute, make sure you don't fall, bust your head open on the ground. And basically you're still trading, and you are entering and exiting trades, setting stop losses and take profits and limits and markets and all that good stuff, but you're not using real money. And if you're wondering why you might want to do that, well, I would think it'd be self-evident, because you can practice trading without giving your money away while you learn. And bring it back real quick to the quote of the day. This one is particularly relevant to this subject. It is by a man named Charlie Beckwith. If you have never heard of Charlie Beckwith before, you probably don't really do much or read much into the world of military literature, but he was the man who wrote a book called Delta Force, and I highly, 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 highly recommend reading this book. It is absolutely awesome. There's also another one by Eric Haney, I believe, called Inside Delta Force. Similar, but a little bit different. Beckwith helps start the unit, whereas Haney was just a early member of it. Haney takes you through the selection course and everything, which is a very good motivational book to read, just to hear, how they went through this and the way they did it. But to the quote here, "It is not the critic who counts, nor the man who points out how the strong man stumbles, or where the doer of deeds could have done them better. The credit belongs to the man who is actually in the arena, who strives, who spends himself, and who at the worst, if he fails, at least he fails while daring, so that his place shall never be with those cold and timid souls who know neither victory nor defeat." Amen. And that very much can apply to trading as well, because let's face it, just to sit there kind of looking at the charts, maybe buying a little bit of Bitcoin every 6 months and just hodling on for dear life, and thinking about trading, debating it, maybe you've been watching my channel and other channels, and you're seeing Market Cypher, and you're thinking, like, I feel like it would help, like the people who use it are like really feeling like it would help. And, I'd like to get into it, like to learn a little bit of technical analysis and things like that. But, it's eventually you're going to have to make that leap of faith. Same thing with me. I was going, and I learned about it from watching BitBoy, and then I saw CryptoFace come on his channel, and then I learned about him, started watching CryptoFace a little bit, started looking into it. And went through, even watched the tutorials, and obviously there's a little bit of sticker shock there, because it's not super cheap, particularly for somebody who's just starting out, might not have a ton of money. And part of these startup costs are obviously you're gonna have to fund that account, and so you kind of have to do that leap of faith. And real quick, before I even get into the chart here, just an analogy for this one, I read the book was written by the guy who founded the Spartan races. And he said that, at first they were debating doing these races for free and just letting anybody join, or just pitching in like a small donation just to help with setting things up and stuff. But after a little bit, what he realized was he started charging more than he even wanted to charge. And the reason was that it would force the people who signed up to make a commitment, because he's like, if we only charge $30 to get into the race, half the people don't even show up. They're like, well, whatever, it's $30. But if they charged 100, 150 or something like that, then generally speaking, the people who where like, you know, you kind of get that at the beginning of the year New Year's resolution thing where you say you're going to hit the gym. They'd be like, all right, you know, I'm going to sign up for this race. I'm going to do it. They're all gung-ho. And then, you know, maybe they slack off on training in between now and then. When race day comes, they give themselves excuses of why, and now it's not a good time. I don't feel like doing it. I'm not in good enough shape, blah, 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 blah. And so I looked at the market cipher thing through the same lens of, all right, you know what? I just got to pull the trigger, just send it, and it's going to force me to start using it, force me to try to learn how to use it better. And in doing so, I'm going to have to make sure that I try to start trading, you know, not just flopping and groping, but try to do some decent trading. And I, you know, because I kind of feel like, okay, I want to recoup the cost of that market cipher subscription, whatever. And at the same time, you know, I kind of later on learned that, okay, don't go into trading like you are trying to make up for something, or they call it revenge trading. Like you lost some money, now you're going in like mad as hell and you're going to make that money back and you're salty that you lost on the last trade. Don't do it. But if you want to learn more about that one, get into the trading psychology videos that I did. But yeah, so I went on way longer than I meant to, but it's such a good and relevant quote. And if you can guess, I mean, you probably could now, but who these gentlemen in the background are, what particular unit they might belong to, throw it down in the comments. I'll send you a big old shout out. But here we are. All right, on the chart, checking up on things real quick before I show you. And we're going to be showing you from within TradingView itself. You can paper trade from within TradingView. There are also other options. Matter of fact, you know, I did a couple searches, came up with some of these, and it's not the easiest thing to jump on some of these and just start doing. TradingView is absolutely the quickest and easiest in my opinion. But it also has this, you know, its cons, its drawbacks as well. But, you know, AllTrading, never really heard of it. eToro, I'm sure everybody's heard of, but I imagine you have to have an account. TradingView, which is what I'm going to show you. Crypto Hopper is an automated trading bot, but you can paper trade with the trading bot. And I'm not entirely sure if you can do it just manually or not. But BitMEX, you know, I'm sure everybody's heard of, big exchange. I guess you can go on their test net as opposed to like trading on the main net. I'm not sure if you have to put up real money for that one or not though, but just to, you know, at least fund the account, and then you're just doing these hypothetical trades on the test net. Not really sure. Investor, don't know much about Bitmart. Stormgain, I actually went and looked up Stormgain over here. Apparently timed out. And I mean, it's a fairly simplistic but sleek looking little exchange here. Now, I could not find how to paper trade because I was going to show it in this video here. And in this article, they're kind of, it's all the way down at the bottom. And I'll link this article. I mean, I'm sure you could find it fast enough yourself. Where did it go? Oh, crap. It came all the way back up to the top. You know, it says that... I don't know what the hell it says because I can't find it anymore. But anyway, it said that you can do like a trial account and that it would basically paper trade. I don't know. I'm here. I haven't created an account yet, and I really don't have anything to run with. They do go up to astoundingly 500x, 300, 200, 100, and below. So if you do decide to use Stormgain, I'm not sure what their liquidity and volume are like, but, you know, be super careful on that one. Looks like I don't even see, not even a TradingView chart, so that's a little discouraging as well. But okay, back to TradingView. So pros and cons of, holy crap, I'm dropping stuff. Pros and cons of trading. So you see down here we have a tab, paper trading, and I don't believe it actually, I think it just says trading prior to that. Let me see if I can get out of this. There we go, log out. Okay, so when you first open up this trading panel, you get this little list of brokers and exchanges here. You know, no broker, open account, and blah, 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 blah. If you see this one right here that says paper trading by TradingView, that's the one you're going to be looking for right there. Just hit connect. Yes, sir. Bada bing, bada bang, bada boom, you're here. And you might be asking, well, how the hell do I start a trade? Well, I shall show you. Over here where you have your little watch list, you know, you could throw that guy back. See these little up and down arrows? About a second from the bottom over here. That brings up the trading panel. And, you know, it goes on whatever chart you happen to have open at the minute. You know, market, limit, stop, sell, buy. So let's say you're trying to short. You can hit sell. Now, setting the price and this info is definitely not as intuitive and user-friendly as using, say, Bybit or Femex or OKX. You know, we don't have... You know, you've got this guy that you can use right here. Somebody's walking by outside. And I'm guessing it doesn't quite work like... Yeah, it's not quite like on... matter of fact, here. You know, over here on Bybit, for example, you can just, boom, click on the order book and it sends the price up here. You know, click on a preset percentage, or, you know, it's got it listed in USDT. So it's real easy, you know, okay, I want to do a trade of, you know, $200 at this price. Boom, send it. Easy breezy, beautiful. Whereas over here, what you can do, I don't know if it's necessarily all that much better, but you can either say, we'll do both of these. You draw a line, and you can say right click right here, go to this little context menu, hit the trade tab, create new order, and boom, it'll lock in that price right where you right clicked. And since apparently, yeah, I didn't click on like the immediate price, so you're getting a different number of ticks from the current price. And then units is going to be, in this case, Ethereum. So 5 ETH, you know, 10 ETH. Got a little calculator here, which, honestly, how the fuck is that even a calculator? Let's see. Plus... No, see, that doesn't even make any sense. So again, not the most intuitive, but you are starting out with 100 grand. So you got a little bit of wiggle room. And then you can automatically have it set your take profit and stop loss right when you're placing the order. And again, you kind of see you've got, you can set your risk management up here if you want. But let's say you just do it. Time in force really isn't going to matter much at this point. So, okay, we are longing. And we are a little bit low. So, it's an open order. It has not filled yet. Because we're trying to buy down here. Ain't nobody trying to sell it to us right now down there. And it's fairly similar down here as it is with any other exchange. You know, you got your status. So right now it's working on filling the order. It's a limit. It's a buy. 10 ETH. Entry price. Expiration. Just standard time and order ID stuff. Now, let's see. Can we do that? Will it allow us? Okay, and then you just got to come over here, hit modify. Okay, so that's kind of nice. I didn't actually play with that before. So in one respect, it is kind of like Bybit, where you can, you know, drag your order entire group. Okay, so you can select multiple orders apparently. But if you hover over this, you can see add stop loss, add take profit, reverse position, should you want to start flopping and groping and go the other way on it. But let's say you want to add a stop loss. No, you're not gonna. You don't care. You're just teasing me. Protect position. There we go. Say stop loss. So I'm not a huge fan of like the way they do this is not so much geared toward, oh shit, look at that little dip downward. It's like the simplistic crypto contracts that, you know, you're probably used to just being on Bybit and Femex and those. Frankly, I love the way they do it. They make it easy for people. But let's say go to 28. Modify. And there's our stop loss. Now, obviously, this is not a realistic trend. I'm not going long right here and setting a stop loss way the F down here. That's just crazy talk. And then now you can see on the orders, filled this guy. This guy's still working. And we have a position, and we are already down $50 in that position because, you know, price came down to our order level and continue to go past as we continue hemorrhaging money. So let's see what's really going on. And you can come up here, the little X on the right, close position. You can do a partial close, but we're just going to knock the whole thing out. Gives you little pop-ups just like it does on like Bybit and stuff. And apparently just leaves them there forever. Jeez. So let's click that once. It'll kind of hide it for a moment. So let's see what's going on here. Oh, also, say we had a line there. Oh, it's just alerts. I thought you could add trades for those. Okay, maybe not. But another interesting little tidbit here is you have this long position and short position. So let's say we do a short position and we set it right where we're at right now. And stop loss, let's say we go just past those last candles. And let's say we hit it down by that trend line right there. And you could change all this stuff like, you know, how much of a trade, or at least, see, it makes it seem more like what's the contract and then how many contracts. But I really don't care too much on that. You know, you have your entry price and then profit stop levels. And it's just kind of a nice thing to watch, you know, just make it match whatever your trade realistically is. And let's say, okay, 0 in the orders. Let's set it. Son of a bitch. Create new 2834. Good enough. Let's do 100. Actually, yeah, we can do that. So it would be nice if we could have it grab this, but you can just come down here and look and see, okay, 2134. What? That don't make sense. What am I looking at here? Oh, that's amount. 3180. Hold up, that doesn't make any sense either. You can't give me a good number on this? Jeez. Okay, let's say 2800. And we throw in a stop loss. 2840. And we are selling. And it ditched my price. In for a week, 100. Short it. Then you can come in here. Do a little modification, and there we go. Now we got an actual order that's generally matching our little, it's not really an indicator, just a visualization. Although this guy's not very accurate. Okay, so that's interesting. So once your order is filled, can't really drag that guy around. That's interesting. There's a little line showing between stop loss and take profit. So let's see what's going on with the price here. It's kind of getting a little busy on here. Holy smokes, we're already down 160. Honestly, that order went in a lot lower than I planned on it, but I just didn't even check the price after it changed everything on me. What do we got here? So, VWAP crossed to the downside. Money flow, choppy, but coming up a little bit sideways. But RSIs came back together, still generally pointing down. Had a yellow X. Let's say, what do we got? A lower wick right here. Strong possibility of a bullish divergence. So we shall see what happens. Gonna tone this down a little bit so it's not so damn bright. We got 14 on the bear side. Coming down from 20 though. -5 to -2. It's just been real choppy down here. If you really want to know where it's going, gotta look up. And starting to pull up on the money flow here. A little bit of a trend going to the upward direction. You could kind of say upward up here, but this guy's kind of rolling solo by himself up there. So anyway, what would be the pros and cons of paper trading? And as I'm sure you've seen just from, this little bit of playing around with it as an example, the biggest pro would be you're not losing real money. Now, the equal but opposite con of that is you're not gaining any real money either. And some more pros would be, you can use it to work out new strategies. Say you are, you're seeing divergence right here or something, which, son of a bitch. You're seeing divergence right here, which, we're not in, in real life here, but just hypothetically, say you were seeing some bullish divergence and you're like, all right, I want to try out my new divergence strategy that I've been, dreaming up. And so it would be good for that because, say, okay, you can throw the trade in there now and just let it fly, set your potential levels and go do whatever else you're doing and come back and check on it later. You could check on it from your phone, whatever you want to do. And the point is that you can test that with a large number of trades, however many you really feel like in the one story time we were doing, the guy suggested doing it for a month. And, you have a larger, let's say if you were kind of doing it statistically and looking to see how well it was working out over time, you have a larger population of test subjects, if you will, and you can get a better average, a better idea of just how often that strategy plays out like the way you think it would. Now, another one is, another pro would be that it helps you to gain confidence because, you're not just trying out this idea, this strategy that you've had and just kind of winging it and hoping it works out, you know, after doing all of that testing, you can go into the trade with a higher degree of confidence in your strategy. And it can also help you to kind of learn the mechanics of trading, you know, setting your stop loss and your take profit. Obviously, this is going to be fairly significantly different from the typical crypto exchanges that you're using, but still, you know, it helps you to kind of learn the ins and outs and mechanics of physically, you know, executing the trade and managing the trade. And it, you know, and it also helps you gain experience in reading the chart in live time. So, you know, when you start to come up on these situations like here where we're coming, you know, dipping down, and then you start to get like a fast pullback, eventually after seeing that scenario play out, you know, a number of times, you're going to start to know what it could potentially do when that happens, what it is likely to do when that happens, or at least just having a general idea. You're not just kind of blindly thinking like, oh, okay, we just got done dipping and we're pulling back up a little bit, but you don't know if we're going to turn back around, if we're going to go sideways, if we're just V-shaping straight back up. And so you have an idea of what it's most likely to do in those scenarios. And when it starts to do one of them, you're like, okay, you know what? I've seen this before. You know, it's pumping back up pretty quick. Odds are it's a V shape and we're going to come generally close up to where we started dipping in the first place. The hell are you doing in my trades? Do we get stopped out? Oh, I think we got stopped out. Look at that. Got a Widowmaker. A stop loss wrecker. That wicked little wick coming through and punching through the stop loss. That right there is actually a very good lesson, because that shit will happen if you keep your stop loss close. What are these guys? Oh, okay, it shows orders in there. That's interesting. Got little buy orders in there, huh? You know, if you are, especially you're starting a trade right here and you've got your stop loss like above the wick of that candle or the previous candle, you very, very, very much are running the risk of it getting stopped out before it can even do anything. Like I talked about previously, generally, you know, you want to set it just beyond, if we were shorting, just beyond the previous high, or, you know, if you're going long, just beyond the previous low. Say we're going long up here or something. So at least at that point, you know, it's okay, we're getting lower low, lower low. If we get another lower low, you know, setting the stop loss right there was probably worth it, because it may just continue on downward, or it's at least going to go, generally speaking, far enough that, you know, you'll have time, you'll see what's going on, and maybe you can re-enter at a better position. Now, obviously, I'm not talking any real strategy right here. I'm just BSing through talking about, you know, paper trading. I'm not, you know, don't be taking any of this as like gospel trading strategy. I'm beyond the scope of this video at the moment. And we've talked about it plenty, but, oh, and so, you know, another pro as well would be that it's more structured than just doing it in your head. You know, if you're watching this chart and you dip and we start coming back and you think, okay, you know what? In my head, I'm thinking, all right, I'm going to go along there. Let's see what happens. And then later on, when you get up here, you're like, hey, yeah, my long is doing great. That's fantastic. And then you start pulling back a little bit and you're starting to get a little choppy and you're pulling back further. You're like, oh, you know what? No, I closed it up here. I would have closed it right there, perfectly at the top. And it gets, you know, it gets a little wiry unless you are like actually coming over here and being like, okay, there's my long. And then you come up here and it's starting to pull back like, oh, okay, nope, close it. and then God forbid, like, it then comes back and continues going up, and you're like, no, I didn't actually close it right there. I closed it up here. So at least, you know, doing the paper trading, you are physically going through with the structure and opening and closing trades, and you can see the actual numbers, and you're not just, you know, over here being like, yeah, I think I would have opened there, and I probably would have closed up here, so like 2.5%, and just kind of giving yourself the big time benefit of the doubt. So, okay, so now that I've gone over some of the pros of paper trading and why you might want to do so, and obviously where you can do so, let's talk about some of the cons. And again, the big one is you are expending energy and time and effort on trading that you are not going to be making any money for. And I'm not saying all this at the end just to try to push you away from it. By all means, not financial advice. You need to decide for yourself, you know, what you think you need. If you want that practice, even before getting into like a real money practice account, by all means, absolutely do it. You know, if you are still trying to stack up some money to fund your account, but you want to start trading, you want to start getting into the groove of things, absolutely, you know, have at it. Like, great idea. Like, that's what I did. I basically practiced. I didn't so much do the paper trading thing, but I was coming in here and putting like horizontal rays all over the damn chart. Like, okay, I'm opening here. Okay, I'm closing here. Made that thing into a right and proper mess, I did. But, so, you know, other cons is you're not actually using the exchange that you would, you know, later on be doing your actual trading on. You know, you're over here, which is very much different from like this guy here. And you can see, you know, some things are generally the same. Market limit stop, you know, market limit conditional, open, close, order price. And then you got, you know, your order by cost. Whereas over here, you're doing the units, the amount of units ordered. And again, you know, it's typically revolved more around traditional markets. Whereas over here, you know, your contracts are 5 cents a piece difference over here on ETH. Whereas, you know, over here, it might be just, you know, whatever that share or contract is. Same thing here, you know, take profit, stop loss. You can set it ahead of time. Then you just get into, you know, balance and all that stuff. There is no time and force for, you know, if you're doing perpetual contracts, because it's perpetual. So it doesn't really matter. And order info down here, tick value is just $1 a piece, but it's largely irrelevant in this case. Basically, you're just going to be setting the price, how much the units, if you want to set these ahead of time. Oh yeah, and, you know, buy, sell, and just go. And look at that, RSI's together, pointed for the sky. Reach for the sky. That's a big old volume candle without a lot of movement. Then again, we're on the 4 minutes, so doesn't have to be that much. Where were we? Yes, cons. So, you know, again, it's not going to be the same as your actual trading exchange. So you're not necessarily getting used to using that user interface. And this one is obviously not as intuitive and user friendly, you know, for at least what I'm used to. And the biggest con of paper trading is going to be you're not getting that emotional control training. You don't have a ton of money on the line, or even just a little money on the line, and you are not going to get the same chemicals being released in your brain as you are just, trading with little ones and zeros and digital dollars. I guess technically crypto's digital dollars, but you know what I mean. It's when there's higher stakes, then it's just like being at the casino. If you sit down at the blackjack table, you're at a $20 table. That's a bad example. Let's say the poker table. You're down, you're putting 20 down. Maybe you end up getting to the point where you're pretty damn sure you got a good hand and you got a couple hundred on the table and you're starting to get a little nervous. You're looking around like, all right, I'm pretty damn sure I'm good here. I think I got these dudes beat. But fuck, if I lose, that's going to be pretty close to being done for the night. Same principle. And along those lines, with the casino reference, just be very, very careful because it can be addictive and it can turn into betting. And that is like the number one thing you want to avoid with trading is don't treat it like the casino. Don't just come in here and say, okay, we've been coming down. You know what? I think it's going to go up. It's been going down. It should go up. I'm betting on, what is it? Long on green, basically. And at that point, you will likely win some trades, very likely lose some or many trades. But every time you win, it's like playing the slot machine. You're going to want to keep doing it. Maybe you start raising the stakes. It's going to reinforce that bad habit. So just be mindful of that. And that kind of ties into the last con that I have here is knowing that it's not real. You're going to tend to treat it unrealistically, especially when you've got, 100 stacks over here in the balance and you're over here like, all right, I'm betting, 500 ETH. Trade value. Okay, maybe we don't have that much in our account because that's 1.4 milli. I'm betting 50 ETH. So 142K. I guess we don't have that much either. Jeez, oh man. We some broke boys. There we go. 85. And you get used to, betting larger amounts on here and be like, all right. And then you get down to your, your real account. Say you only got $1,000 in there. And you're like, well, shoot, I've been betting 80 grand over here on the paper trading, and you are not experiencing that emotion because you're just like 80K along. Hell yeah. Oh, well, if I lose 20K, whatever. And then you get to the real deal and you start being all willy-nilly with your money like that. There's a good chance you're going to run out pretty quick. So, just try to treat it realistically. Don't just, go in on, flopping and groping trades, especially up here where it's getting scrappy. Maybe not up there. That's a decent one, but you know what I mean? Just don't just, short it right there just because you're like, ooh, you see some red candles. Don't start flopping and groping because it's not real money. And what do you care if you lose it? Try to treat it realistically as much as you can. Looks like we're kind of rolling over right now. What do we got here? Meh. Money flow to the green, but not the best. That's a 4 minutes. Hard to judge anything right there. Let's see. Yeah, I turned the ribbon on for a minute. I was going to use it as part of the thumbnail, and it's kind of reminding me how much I don't like having the entire ribbon there. As you can see with the DBSI, it makes it really hard to read. That's better. What we got? Is that 18? Get rid of these damn arrows. 17, 18, 8. So we're kind of weakening, rolling up on the 30-minute. Weakening, rolling over and down on the 4-minute. Potentially. You know, VWAP kind of coming down. RSI still together. Kind of curling over as well. Bump up to the 8-minute. 19, 20. A little bit of split, but basically matching where we came before the flip. It's got a little bit of strength. It's not quite exhaustion numbers. That 12 and 19 show a little bit of strength. 16, 17, again, a little bit of strength. Plenty of upside on the momentum wave to go. Jump to the 30 again. Yeah, money flow not looking hot at all on the 30-minute. You know, if we see the price come down below here with like a rollover on the momentum wave, be nice to have that bullish divergence. I'd be going in at that point. So what do you guys think? You know, what's your opinion on paper trading? Oh, while I'm here, I did have a comment, if I can find it. Man, I wish it would hold the old comments on the list. Oh, shit, I don't remember what video it was. Is it this guy? Nope. Man, YouTube sucks at showing you comments after you already respond to it. Nope. I think. Where's that how to not suck video? I need a how to not suck at browsing through YouTube's backend. Are you kidding me? You're not, what the fuck? You're not showing me any of them? All right, well, YouTube sucks. But basically, you know, I'd gotten a comment from a viewer and he gave a really good example of why you might want to use paper trading. You know, he had been trading previously and, you know, was making some money, but then ended up losing a fairly significant amount to the point where he had to take some time off because he didn't have enough money to, you know, re-up and resupply that account, but still wanted to keep trading, wanted to get better, correct some of the bad habits that he had previously had, and was saying that, you know, the paper trading would be, you know, great for doing that and kind of getting him back into a better trading strategy and mindset moving forward for when he was able to, you know, put up some more money on the account. And that is absolutely probably the best example of why you would want to, you know, because it's one thing just first starting out. You know, I've said in previous videos, by all means, if you feel you need to or you want to do the paper trading, absolutely do it. You're probably going to get bored with it relatively quickly, which is why I kind of jumped into just having the starter account, you know, throwing 100 or however much, whatever you are not worried about losing, and throwing it in there and just doing small trades. Because even doing small trades with real money was more realistic to me than doing the paper trading. Because, you know, even though, you know, I might only be, you know, making or losing $5 to $25, at the same time I was treating it like it was, you know, $5 grand to 25 grand, and it's really not that hard to do. I mean, like, obviously you're not going to lose sleep over losing $5, $10, whatever, but on a $100 account you lose $10, that's already 10% of the account gone. So thinking of it in percentage wise is what really helped me, because I'm like, okay, you know, I do not want to be losing 10 or, God forbid, 20% of that account, because when that account gets down to zero, now it kind of hits home. Now you have to make the decision, all right, do I want to put another 100 into that account to keep training myself, particularly if I'm doing dumb shit. Then you're like, okay, you really feel like you're like throwing money away on this because you actually are. So it kind of forces you to take it a little bit more seriously and to really try to stick to the guidelines, if you will, that, you know, you set yourself. So that's kind of, I think all I've got to say about that. What do you have, 45 minutes? Yes, I ended up droning on for a little while anyways. See, okay. Shit came over here to Bitcoin. Potential bullish reversal. You know, had much lower low over here compared to over there. And assuming that this holds, that it doesn't, you know, dip down further, that could be our bullish divergence. And we got a little VWAP potentially coming up to cross over. Money flow looking oogle at the moment, but hopefully we're hitting the lower peak on that money flow. I hope it's so. Or at least that it does something. It's at this like in-between point right now where it's like, do I go long? But are we preempting a little bit? Now this doesn't look terrible. You know, it might be about right at that 3/4 point. Got the big green weenie. And it was one candle back, so it is confirmed. VWAP did just cross over. What time is it? You know, it'd have to be a trade that you pay attention to. VWAP a little bit concerning how we're curving over sideways, but you know, you can always trade and go any which way, really, as long as it's above the zero. RSI's curling back up, you know, a little bit tighter than they were back here. Even closer over here. Yeah, technically it's higher than here, so it's technically some bullish divergence on the 12-minute. Hey, that fits the strategy we were talking about the other day. What do we got? 23.24. Does that say 18? That does say 18. You know, are we reaching a little exhaustion? I don't know. So usually when that's the case, you know, we'll hit these 23.24, even like a 25.26, and then fairly quickly at that point, you'll get a little bit of a pullback, and it'll generally stay above the previous low and continue up from there. Now, I'm still looking for the same thing to see this, you know, either just continue up or at least stay above that low. Let's go higher. Let's see what the bigger picture is looking like. 16, 17, not looking good on the hourly though. So it may be lending a little bit more credence to this being just a little bit of a pull-up before continuation. You know, RSIs are coming together as we're heading down. VWAP below zero. Money flow decreasing. Plenty of room here for another potential bullish divergence, but has not yet played out on the hourly. Let's check the 4-hour. Now 4-hour, we are weakening up here. Matter of fact, it's kind of the opposite of what we're seeing on the 12-minute. 20, 23, 9, 8. You know, VWAP been below for a little bit, potentially head back up in a minute. Not yet. Now, RSIs are heading down. I'm not going to attribute too much to the fact that they are starting to split, but, you know, looking at it from out here, they're generally pretty close. Ah, damn, I got off-centered. Here we go. So if I'm looking for, you know, something potentially overnight, I definitely want to make sure that I have the macro direction on the higher time frames. And the big one that still stands out to me is, you know, this guy right here. On a 4-hour, getting bearish divergence. Yeah, I said it before. I felt like we were going to pull back. I'm still thinking we've got some more back to go, at least here. Doesn't have to be, but I mean, that's a big bearish divergence on a big time frame. You know, potentially could be coming back into this little range right in here, even if it's just something like that. Tomorrow will tell the tale. But all right, what do you guys think? What's your opinion on paper trading? I'm curious to hear everybody's, you know, stance and position on it. You know, I keep hearing kind of from different sides. Like, I get it. It definitely has its place, while at the same time, you know, some people are impatient and they'll think it's a waste of time, but at the same time, other people, it's just not realistic to start trading with real money yet. So to each his own. On that note, regardless of whichever side of the debate you are on, you know, just remember, credit belongs to the man who is actually in the arena. You know, the one who's actually putting in work. Doesn't necessarily mean that it has to be the guy trading with real money, but the guy who is practicing a trading strategy, who is developing their skills, who is trying to get that experience, and the experience absolutely takes time. It takes quite a bit of time. You know, even just in like the last year and a half that I've been, you know, taking this seriously, I'm really only even like recently starting to, you know, see different scenarios and situations and being like, okay, you know, I remember this happening a bunch of times before, and that this is how it usually tends to go when that happens. And then I kind of judge, you know, what's going on based on what I've seen before and see, does it match up, or are, you know, is this a new potential reaction to this situation? And not only that, you know, as the seasons change and as the trends change directions, you know, you see different patterns. Just like how lately we've been seeing this, you know, pump up, erase it all, pump up, erase it all, pump up, erase it all. That's kind of a new one that I really don't recall. If I did see it, I wasn't really paying this much attention to it. So, you know, with time and experience comes wisdom. But all right, everybody, have a fantastic evening. And oops, I kind of left you on that one for a sec. Yeah, I was talking about those pump up and erase it. But have a wonderful day. By all means, go and check out Charlie Beckwith's book. It is fan-freaking-tastic. And I'll see you guys back probably tomorrow.